So the next topic we go to is how to become a trader and an investor. What are the things you have to think around it? So then the first thing comes out, whether I'm a part-time trader, a full-time trader, whether I'm a part-time investor, a hobby investor, or a full-time investor. Now, the simplest way to qualify both of them is when you say full-time, it can either be all your money is coming from, majority of your income is coming from trading or investing, or majority of your time is going for investing and trading. There are two ways you can think of yourself as a full-time trader, right? Either all your income is coming from trading or investing, or either all your time is, majority of the time is going for it. Same way, what is a part-time trader? Wherein 80% of your time goes into your job, your business, your profession, various things. But you spend 10-20% of your time looking at your portfolio, rejigging your portfolio, looking at your trades, etc. Now, this is where there are a lot of problems. So a lot of people start off being part-time traders with this dream of becoming a full-time traders or full-time investors. The dream is not because you like trading or investing. For majority of the people, it is their not liking their job or hating their boss or various other things which they do not enjoy in their current profession, right? Because the point is, everyone dreams of having a full-time profession in a hobby, right? But the fact is, for example, everyone wants to be a singer. A singer works for more hours continuously than you've ever worked for, right? It's just the passion which drives him, or this is the thing he likes to do, he or she likes to do. So in the same way, full-time trading and investing, the problem is when you come to full-time trading and investing, it is very similar to running a business or running a small enterprise. You have your mental capital, but you also need financial capital. Now, majority of us are generally undercapitalized. And there are multiple reasons for it, right? So a very simple example is, how much capital do you need to be a full-time trader? So you do a very simple example, say consider you'll make 20% returns post taxation, right? So if your salary is 12 lakhs, simply put, if you want to make 12 lakhs, you need at least 60 lakhs of capital, right? Which is 5x the amount of money you want to make. Consider that there will be tough times, there will be a drawdown period. A minimum buffer is you need 8 to 10x your salary to become a full-time trader. Assuming that you are a good trader, you have a good strategy and you are going to make returns over a long cycle. I am not even going into that. So the fact is, if you need 10x capital, right? So that is your first obstacle which cannot be solved by your mental capital, right? You may be the best trader, but how will somebody give you money, right? You need something on the table which is proof, and even after that, it's very difficult to get external capital. And even if you get external capital, you will get part of the shares or you charge a fees. So your own capital will take time to build. Even if somebody gives you that capital for free, maybe your parents, maybe your relatives, maybe your friends, right? They cannot give you the capacity, the capital to actually have the mental bandwidth to lose money and think the same way. They cannot give you the risk tolerance along with it. People can give you capital, but risk tolerance does not come naturally. Suppose you are buying 1 lakh worth of shares and suddenly you are supposed to buy 15 lakhs worth of shares. A 10% downtick would imply you will be losing more absolute number than what you were putting into a stock before. So looking at a 1.5 lakh loss when you are actually putting only 1 lakh in a stock, suddenly your brains will freeze. You will go numb. You will not know what to do. And it will also happen on the other side. You are sitting on a 20% profit. Your first instance would be to cut down your position, right? Even though your strategy says you have to remain in the trend till the time it says so. Fundamentally, it tells you, boss, the company has only started doing well now. I need to stay the course. But because your capital has increased, suddenly your brain freezes. It cannot look into percentage terms. It starts looking into absolute value. A classical example for derivative traders is the same. Everyone I speak to, those who are new amateur derivative traders, talk in absolute numbers, wherein they say, I made 50,000 rupees today, I made 20,000 rupees today. Nobody talks about I made 1% on capital or 10% on capital. So if you made 10% on capital on a single day, it could be either via leverage or you just had a very concentrated single position, right? So this is where it comes to full-time trading and full-time investing. Now going into full-time investing, the barrier is much more higher in terms of capital because your only cash flow which comes to you, see, because if you're a long-term investor, you'll remain invested into stocks for 6, 12, 18, 24 months, 36 months, right? So you'll only be booking profits or taking money out after a period of time. So your only cash flow you have is in the form of dividends. And generally we do not have more than 1 to 2% dividend yields on majority of the stocks in India. So consider you have a 2% dividend yield. Now you are getting even taxed on dividends, right? So you need at least 50x capital to become a full-time trader. Consider you take the barrier a little low wherein you'll pull out some money from your capital whenever you gain. You need 30x to 50x of capital. Now that's a big barrier for majority of the people, right? Because then suddenly you are supposed to have risk tolerance, which is much more higher. Consider your salary is 12 lakhs and now you are supposed to put a 6 crore portfolio, right? And COVID happens. Suddenly you are going to lose what? 30% of your capital within no time, right? So losing 30% of capital, losing 1.5 to 1.8 crores, which is equivalent to what? More than 10 to 15 years of your salary in a particular period. Will you be able to digest it? Will you be able to remain sane in those times, right? Now this capacity will not come to you naturally. It will take time. It will take a couple of cycles to become a full-time investor, or at least one full cycle. When I say one full cycle, you go from the bottom to top and then correct 20, 40% and then again go back. So once you've done the full cycle, you'll have the capacity to see because you've already seen those phases, right? And there are long periods of time where an investor does not make good return. So in 2008, whatever you bought fell down by 40 to 60%. In 2011 to 13, small caps were down 50%, right? In COVID itself, in a period of less than say 40 days or 15 days, you are down 30 to 50%, right? Now this capacity will not come quickly just with capital. You'll have to build your mental capital, which will be a function of learning plus the practical things which I'm talking about. So now you understand the importance of capital, then you go to the full-time part of it. So a lot of people who think, okay, just because I'm part-time, I'm not making money, is the biggest fallacy you can have, right? So a lot of people think if I put more time into the markets, I'll definitely make more money, right? Suddenly the markets will start going up because you've become full-time. That will not be the case, right? Suddenly you will have the best stocks under the sun because you're putting more time. So the fact is, when you're making decisions as a part-time or a full-timer, you'll only be more efficient in your research. Your results will not change just because you became part-time to full-time, right? If you're a trend follower, the trend has to be there in the markets. Whether you are part-time or full-time, if there is no trend in the market, you can't do anything just because you're full-time, right? So a lot of time what happens is, people think just because they'll spend more time, they'll get more money. Because that is how we are inbuilt, right? For example, you take up a job, right? If you spend more time, you're obviously going to grow faster, right? Everyone, that's the reason, puts a lot more money. If somebody is in a business, he'll try to put more lines at work. He'll try to put more efforts. And it actually at times converts into a better financial situation, which may not be the case with the markets. The market doesn't know what you're doing, right? So understand your situation, take your own time. So full-time trading, full-time investing comes at a later stage. Or you should have a lot of capital which you have inherited, and you've inherited a lot of risk capacity along with it. Now that we've understood what is the difference between full-time and part-time, you have a lot of questions which you only have to take an answer from, because I may not know your personal situation, but I've given you a lot of things which you can think. What is your capital? What is your time? How much time do you have available? How much interest do you have? Now we go to the next part. What are the different types of trading which we can look at, right? So now I'll go from time frame, because that is the first indication of what sort of trading you are doing. Then you'll go to the way you research, etc. comes later. So the lowest time frame could be you're a high frequency trader. Now what is a high frequency trader? These are automated machines, algorithms, which are run by the best of the best in the world. For example, if you look at the top algo firms in India, there are 5 to 7 of them. Some of them are churning more PAT than a lot of listed companies in India. But they are the best brains, right? So for example, you'll see a Graviton Research there in bulk deals. You'll see a Tower Capital. You'll see various things. They end up trading a lot of it. But it is not just mental capital. There is a lot of physical capital which goes into it. A lot of infrastructure which goes into it. So you may not be the owner of such a company. You might be working in them. But for that, you should have a lot of math skills. So majority of these places are a mix of various brilliant minds. So I'll remove HFT because this is not for everyone. Then we go to the next part, which is day trading, right? So the fact is, how much skill set is needed? So the very simple graph which I have is, the lowest time frame needs the highest skill set. The longest time frame does not necessarily need the highest skill set. Now that looks a little odd, right? But the fact is, if you put money into a Nifty index fund, if you put it 20 years back, you still got 6 to 12% returns. Over the last 20-25 years period, a 10-year rolling return on Nifty is closer to 8 to 12%, right? And your fixed income returns are 6%. Previously, there was no tax on long term. So you are compounding at 1.5 times your fixed income. Did you have a lot of skill in indexing, right? The only skill set you were left is when were you putting a lot more money, etc. Consider you were just running a SIP for 10 years, right? In the same way, a lot of luck can also change on the long-term time frame. For example, somebody who bought companies in the 1980s and say bought 2% allocation to 50 stocks, right? And one of them turned out to be a Hindustan Unilever of the good old times, or Bajaj Finance in the last 20 years, right? Or in the last 15 years. You ended up buying some small cap which went up 100x, right? So out of 50, even if you got 3 of them and you have forgotten the portfolio, right? You'll still have a much better return than most mutual funds. And this is what has happened in a lot of cases. So there was a study by Fidelity wherein which are the best performing investors in their schemes. And the conclusion was people who had expired and never looked at their portfolio. So the dead are the best investors.
Wait, अगर आप ये वीडियो देख रहे हैं मतलब आप टेक्निकल एनालिसिस में इंटरेस्टेड हैं, तो फिर एक वीडियो पे क्यों रुकना जब आप सब कुछ टेक्निकल एनालिसिस के बारे में सीख सकते हैं हमारे कोर्स से जो Upsurge.club पे अवेलेबल है। ये कोर्स ट्रेडिंग साइकोलॉजी, रिस्क मैनेजमेंट से लेके सारे इंडिकेटर्स कवर करता है। तो जाइए और एनरोल कीजिए अपने आप को इस कोर्स में। The link is in the description.
Dead are the best investors. Why? Because they've never let the compounding stop and it has just continued. So you can get lucky in extreme long term, buy a stock which is just 2% allocation. If it goes up 1,000 times, we've seen that happen. If it goes up 200 times, it just takes care of the return on your whole portfolio. Because your 98% of the stocks will not go to zero, right? They'll also go up 100%, 200%, 1,000% over a period of 20 years. On the lowest time frame, it is not just about skill, right? Can you afford a co-location server? You cannot, right? The charges are crazy. The data charges are crazy, right? For example, a Bloomberg terminal costs you more than a couple of lakhs on a monthly basis, right? So the lowest time frame is skill plus physical capital plus a lot of infrastructure. Same way we go to the next one, which seems to be the most easiest, which is day trading. So before I go to day trading, understand this thing. As lower you go on the time frame, you need a lot of skills, you need a lot of temperament, you need a lot more decision making, right? On the longest time frame, you're an index guy. All you have to do is do a SIP and let it run. So there are hardly any decisions to be made, right? If you're taking next step is you're doing mutual funds, then maybe you rejig your mutual fund portfolio maybe every 1, 3, 5 years, right? So the number of decisions made are lesser. As you go lower and lower in time frame, the number of decisions made are multitude, right? So HFT runs maybe 1,000 orders in less than a second, right? In the same way we come to day trading. That is where you go to the next part. So the curve is very simple. Lower the time frame, higher the skill set and various requirements. Then we go to day trading. This seems to be the most easiest way to make money, right? Because what happens is whatever you make today comes to your account today, right? Now, any day job is a lot of skill, right? Nobody gets paid every day. You get paid salary at the end of the month, right? You get paid even in the best of the countries at a 2-week time frame, which is the lowest, or the weekly pay. A daily pay implies a lot of skill. I'll not go into the details of it, but many people cannot get paid on a daily basis, right? There will be a lot of physical skill involved. There would be a lot of various things. It's only in India the physical skill is not well paid, but across the world, a day job requires a lot of skill. So the fact is, every day if you could make money, that's the brilliant thing, right? You traded today, you got the money today, go out in the evening and enjoy, right? But the fact is, like SEBI says, 89% of the investors don't make money in futures and options. Majority of the day traders are in futures and options, right? So, because when you make a decision to buy or sell in the day, you have to make 2 minimum decisions to be done inside the day, inside the hour, inside the minute, right? More the decision making, more difficult it is. That's the fact. So, majority of the day traders do not make consistent money. Even the people whom I've met make consistent money after a period of time. Their physical ability is not the same. You cannot punch orders at the same speed. Your brain cannot function at the same speed you are working at 20, 30. You cannot be expecting a 60-year-old to be punching trades at the same speed, right? Thinking at the same speed. Even if you are thinking, you can't be physically. So a lot of people burn out. A lot of strategies which would work on lower time frames have been just thrown out of the window. For example, back in the day, you could do a cash and futures arbitrage, wherein you bought in cash, sold it in future. Today, for the same thing, you have an arbitrage mutual fund, right? You have FIIs running that. So the simplest strategies go off with mechanization. So my view is day trading is difficult, not that easy. There could be some people who will be brilliant. I am not brilliant enough to be a profitable day trader, so I can't teach you about day trading. And majority of the people cannot, because there is a lot of temperament required. Because you take a trade at 10:45, you have to close it at 3:25. Just because it is trend following, you cannot carry it to the next day if you have a strict day trading principle and you are using leverage. The next part we go to is swing trading. Now swing is basically where people could have a 7-day to 14-day to a 30-day period of holding and selling. It could be long and short as well, right? So this is a time frame where you have an initiation done today. Your next decision is going to be some time away. See, mentally you are not capable of making such decisions as easily like a HFT. Same with day trading. But swing trading is a lot more easier in terms of number of decisions. See, right decisions is a factor of what is your strategy, what is your analysis, what is your allocation. We'll go to that part also. But swing trading makes the time frame a little longer, and you have your stop losses in place which can be executed. And today there are multiple ways you can easily connect to the exchange. It is no more, connectivity is no more an issue. Say if somebody were to trade 30 years back, you could not go to the ring, right? You call up the broker, the bid and ask could be 5%, 10%, right? So you could not trade. You did not have physical access. Today you can trade on the phone. And even today, almost 20% of the trades on the exchange come from a internet connection or a mobile connection. Majority, 20% is closer to mobiles, right? So there is connectivity. So that part is taken care of. But say when I started trading back in 2004, we were trading on a dial-up internet connection. We could not afford a VSAT, right? Dial-up goes off, you have to call the broker. The broker's lines are busy, you have to wait, right? So a lot of things have been, at least on the physical side, have been removed, right? So swing trading is possible for a lot of people. The next one goes to a little more positional trades, which is where you go to 1 to 3 months, 6 months of trend following positions, which can be done. There can be a lot of backtest done. And you can use technicals. For example, I use Techno Funda, wherein we are looking at breakouts in fundamentally good stocks. Somebody is looking at purely technicals. We are looking at sectoral analysis to find the best possible sector. So a lot of analysis is there which can be replicated for doing positional trading and investments. The next one we go down to is something called as momentum trading. Now this is where it is purely a automatic approach on a set of rules. And there are a couple of courses on Upsurge on those topics as well. Now what is momentum trading? Which is where For example, you have a universe of say 1000 stocks which comes into your universe. Then you select the 20 best stocks. Somebody runs a 20 stock strategy, somebody runs a 40 stock strategy. I run a top 10 strategy, right? So the strategy comes in, the stocks maybe on various ways, somebody ranks it on fundamentals, somebody ranks it on technicals, and comes down to the fact of 10 stocks to be bought or 20 stocks to be bought. And it keeps on doing it. In the same way, if your say rebalance period is 1 week, 1 month, or random, whenever there is a change in strategy, your 100 rupee could go even to 60 rupees of investments, to 40 rupees of investment, right? So it's a strategy which you can backtest with all your rules and all your say universes, and then decide what fits you, right? Somebody will not be comfortable with a top 10 strategy, somebody will be not comfortable with a 50 stock strategy. So you'll find your place in it. But momentum trading, as a matter of fact, is a decent enough strategy. It's only on very, very large capitals it will become difficult. But I think we are undercapitalized any which way. So we can cut that part off in our thinking as of now. The next one, which you go towards investing, right? So a lot of people also run investment portfolios purely on a momentum basis, right? Which is all your investments are driven on the momentum trading algorithm or your logic. Now comes the investment part, which is where it needs a lot more of research to be done. It's not just a function of executing on a set of rules. Every investment is a different situation. You need to understand market cycles, and a lot more capital needs to go. Like I said, if you want to be a full-time trader purely on investment, right, you need to put a lot more capital, because you cannot remove capital on a regular basis. For example, somebody is doing option selling on a daily time frame, right? They may be able to pull out capital on a monthly basis. A long-term investor may get dividends only once in a year, right? So it goes much more deeper. There is a much more higher requirement of understanding businesses, understanding fundamentals. Just because you can look at the balance sheet today does not make you a full-time investor capable of making the right decisions. So you need to understand a lot more. A very simple example is, what is a cyclical company? What is a growth company? Is buying growth companies at ATP going to be profitable? It could be profitable for a case which is a lower market cap. It could not be profitable for a case where the company is already the highest market share. It may not grow at the same pace. There are so many decisions to be taken, and every time there is a different market cycle, there are different sectors. So investing requires a whole lot of it to be understood as well. But when you say investing as a full-time career, the fact is you want to be making more than an index mutual fund. You want to be making more than the normal mutual fund. Then you're worth putting all your time to full-time investing. If you're also going to make 8 to 12% returns per annum, then you're better off giving it to an index fund, right? You need to be making, so the simplest ratio which we have is for an investor, you want to make 1.5 times the fixed income. In the same way, if I want to be a full-time investor, I need to make 1.5 times, then somebody who's going to do it for me full-time, right? So I need to make 1.5 times what a mutual fund makes, what a portfolio manager makes for me to actually start making sense, or my capital has to be really large to do it myself, but at least I need to do better than the index fund or the mutual fund. So one data which I was looking at was crazy. There's a Nippon mutual fund which over the last 10 years and 20 years has done 20% CAGR or more, right? So that's your benchmark, because that's not a very high cost fund. It's not charging you 10%. It's not charging you a carry. It's not charging you a profit share. It's only the management AUM fee, right? So that's your target. So you can't be making 12% and saying I'm full-time, unless your capital is really, really large, which cannot be easily deployed. So this is where your various types of trading go. But the fact is, you can do all of this on a part-time basis. I know a lot of full-time investors who still have a day job. So a very classical thing one of my friends said, if I'm a full-time investor, I still have to spend 8 to 12 hours doing something constructive. If I cannot read for 4 to 6 hours on a regular basis, what will I do as a full-time investor, right? In the same way, if you are an extreme short-term trader, you want to be looking at the markets for 4 to 6 hours to understand what is moving, what is happening. But if you're not capable or if you're not inclined to do it, you'll fail terribly. So a lot of full-time investors become traders because they don't know how to spend 8 to 12 hours. A lot of traders become derivative traders because there is no action happening on a daily basis, right? Say for example, you've given money to a momentum small case, you've given a techno funda small case, right? You're just seeing the returns. Now consider you want to run the own strategy. You've created all the backtest and you're running it. But your time is not needed every day to execute the trades, right? So when you become full-time, you also need to learn how to use your time. There is only this much you can read, there is only this much you can remember. There is only this much you can backtest, and these are the only viable strategies you can work, right? And the risk capacity to think on various time frame is not there. You cannot, majority of the people cannot be a day trader and a long-term investor both, right? Somebody can do a mixture of various types of trading, but not everyone will have the temperament. For example, if you do not have temperament to digest profits or compound, how do you become a long-term investor? How do you become a trend follower? If you chicken out on a 10% move, you cannot ride a 60% trend, right? So you'll have to build temperament or accept this is not my temperament, right? So if you do not have patience, you cannot go to higher time frames. In the same way, if you have a lot of patience, you cannot be a leveraged short-term trader, right? So you need to understand your temperament, and that will come after spending some time into the markets. So these are the various forms. So for example, like I said, day trading is not for me because it does not fit my temperament, right? Because I like to follow bigger trends. In the same way, I have this very nice example of an investor. I don't want to name him, but this is a very classical thing he said. Say back in 2012 to 13, the markets were in a very boring sideways period. The markets were down. So I started trading. And then he said, I started trading. I was doing okay, one day up, one day down. I'm having a derivative portfolio. Something is going up 5%. But on a trading basis, what happens is you're not going to be right 80% of the time. You're not going to be right 90% of the time. You expect your hit ratios to be 30 to 60%. And there are so many decisions. So he said, my ego was getting hurt every day and I could not take it. Because you have a loss-making transaction every day or every week. As an investor, I would realize I've made a mistake after months and years. And in some cases, the compounding could be lesser than the expected return which I wanted. So that is also a mistake. But out here, I'm losing money every day and I feel stupid. How can I lose money who spent 15 years into the markets on a regular basis, right? So, and this is a guy who's done really well, right? So he said, my temperament, my ego just could not take it, right? So I know a trader friend of mine whom I recommend a stock, right? I say, boss, this is there to be kept in the portfolio for 1 to 3 years. And the stock goes up 15%. The first thing, kya karu? Bech do thoda? Can I sell some? Should I do partial booking? Right? And the same person will have 10x of that position in a derivative portfolio, right? Because he is not used to digesting 15, 20, 30, 40, 50% moves, right? A day trader who's an option seller is not used to carrying positions overnight, right? So I have a friend who runs a trading desk. He says, I don't want risk on the books the next day, right? Because I've employed a lot of traders. We are doing a lot of option selling. What if the next day is the May 2009 upper circuit? What if it's a May 2004 lower circuit? What if there is a surgical strike? What if there is COVID, right? Because I'm running a levered book and I don't want to lose capital very quickly on a single day, right? So everyone has different situations, different times. So I remember a particular case where a friend of mine, an ex-client of mine said, I lost a lot of money because I was on a vacation. So he had a huge leverage position and he was on a vacation in 2004 and the markets corrected 10-15% in a quick time. And he was not even connected to the grid. right? Back in the day, if you're traveling abroad, you did not have an easy connection to prices. And before that, the markets are okay. And suddenly something happened, right? So in the same way, consider COVID happens, right? You are in some other country, right? You will have a lot more issues to think whether you want to come back to India, want to go back somewhere, right? You're stuck in a place. So a lot of things can happen. At least today in this world, connectivity is no more an issue. So the fact is, everyone has different situations. For example, somebody who has a condition wherein he cannot be connected to a phone. If you are in a meeting for 3 hours, right? You cannot be trading on your phone. It will not look good. It will not be possible. Can you have a naked option selling position in that situation? Or can you have a naked call? Right? So there are multiple such situations which are your personal situations. You need to understand my situation today. See, the situation could be different a few years down the line. So ask yourself, what is my situation time-wise? What is my situation capital-wise? What is my situation risk-wise? And what is my situation, my strategy-wise? And then find something which fits you really well. And once you've got that, then we go to the next part, deeper parts of what is allocation, what is leverage, what is concentration.